Question 1. In the modern context of multi-currency transaction management, PeopleSoft's revaluation process is run at month-end. If an organization notices large unrealized gain-loss amounts that do not match exposure, what is the most likely configuration oversight causing this mismatch? A. Using incorrect accounting templates for realized currency conversion. B. Failure to define proper revaluation accounts in the chart field setup. C. Running revaluation before posting all foreign currency journals. D. Applying translation rules to base currency ledgers only. Answer. Correct answer. C. Explanation. The mismatch typically arises when revaluation is run before all relevant foreign currency journals are posted, causing the process to ignore unposted transactions. Correct sequencing ensures accurate unrealized gain-loss calculations. While incorrect templates or missing revaluation accounts may cause posting issues, they don't create mismatches between exposure and revaluation amounts. Translation rules on currency ledgers are irrelevant because they don't alter foreign balances needing revaluation. Question 2. Given the circumstances that Mr. Alvarez is finalizing year-end consolidation for multiple business units with differing fiscal calendars, what is the best practice in PeopleSoft to ensure accurate consolidation adjustments? A. Align fiscal calendars across all business units before consolidation. B. Use calendar mapping in consolidation setup to align periods. C. Run separate consolidations for each calendar and manually merge results. D. Post consolidation journals directly into local ledgers before mapping. Answer. Correct answer. B. Explanation. Calendar mapping allows consolidation to account for differences in period structures without forcing calendar changes, ensuring accuracy and compliance. Aligning calendars globally is disruptive and may not be feasible. Running separate consolidations increases risk of inconsistency and manual error. Posting consolidation journals before mapping introduces misalignment as adjustments would not sync to consolidate. Reporting timelines. Question 3. Through careful analysis of journal approval workflows, a financial controller notices that certain high-value journals bypass approval. What underlying PeopleSoft configuration could cause this? A. Journal source not linked to approval process. B. Approval framework threshold set above the journal amounts. C. Journal template missing required chart field combinations. D. Business unit not assigned an approval hierarchy. Answer. Correct answer. A. Explanation. If the journal source is not mapped to the approval process in the approval framework setup, related journals bypass checks regardless of value. Threshold settings only limit approval when properly linked. Missing chart fields cause validation errors, not workflow bypass. Approval hierarchy at the business unit level is necessary, but lack of it causes all journals to fail routing, not selectively bypass. Question 4. As illustrated by Mr. Kingston's attempt to integrate accounts payable with the general ledger, he notices certain voucher accrual entries do not appear in GL. Which PeopleSoft integration oversight is most probable? A. Journal generator not configured with correct accounting entry type. B. Missing integration broker service operation routing. C. App business unit not mapped to GL business unit. D. Incorrect chart field combination rules applied during posting. Answer. Correct answer. C. Explanation. If the app business unit is not mapped to a DL business unit, vouchers post successfully in app but fail to generate journals for GL. Journal generator setup matters only if mapping is correct. Missing integration broker routing is more relevant for external system integration. Incorrect chart field rules block posting within GL but do not prevent voucher accruals from appearing as journals entirely. Question 5. In the absence of proper ledger group configuration, what is the immediate risk when managing multi-currency transactions in PeopleSoft? A. Exchange rate types being applied inconsistently across ledgers. B. Foreign transactions posting to base currency without conversion. C. Inability to run translation for secondary ledgers. D. Posting of duplicate journals in both base and foreign ledgers. Answer. Correct answer. B. Explanation. Without proper ledger group configuration, currency conversion rules may not trigger, causing foreign transactions to post in base currency incorrectly, distorting reporting. Exchange rate inconsistency requires misconfigured rate tables, not ledger groups. Translation can still run if linked ledgers exist. Duplicate posting typically arises from journal-generated duplication issues, not ledger group omission. Question 6. The relationship between drill-down functionality and data integrity is critical. If a user drills down from a balance sheet account but sees no transaction detail, what is the most likely cause? A. Transaction security settings restricting access. B. Drill down not enabled for the ledger group in question. C. Data archived to history tables without link to summary. D. Ledger inquiry pages filter by incorrect fiscal year. Answer. Correct answer. C. Explanation. If transaction data has been archived without maintaining links to summary balances, drill down returns empty results. Security settings block access entirely, not selectively by drill down. Disabling drill down at the ledger group would affect all inquiries, not just some. Incorrect fiscal year filtering affects result scope but wouldn't eliminate all details for the count. Question 7. When evaluating the merits of PeopleSoft query for GL analysis, which design approach minimizes performance degradation in large datasets? A. Building queries with as many joins as possible to capture all related tables. B. Limiting prompts and filters to encourage broader data retrieval. C. Using selective criteria with index fields to restrict dataset size. D. Creating queries from summary ledger tables rather than transaction tables. Answer. Correct answer. C. Explanation. Indexed field filtering allows the database to optimize retrieval speed, reducing processing time in large datasets. Excessive joins degrade performance by forcing large in-memory processing. Minimal prompts expand results unnecessarily. While summary tables can speed reporting, they limit detail visibility and still require careful indexing for optimal results. Question 8. Throughout the course of a month-end closes, Hargrove observes that certain automated allocation journals post without human review. What is the safest configuration to maintain control while retaining automation? A. Disable allocation journal automation entirely. B. Route allocation journals through approval workflow before posting. C. Post allocation journals to a staging ledger for review before final posting. D. Use system IDs that require manual posting for allocation journals. Answer. Correct answer. B. Explanation. Approval workflow allows allocation automation while ensuring human oversight, meeting both efficiency and control requirements. Disabling automation increases workload unnecessarily. Posting to staging ledgers adds complexity without guaranteeing review. Requiring manual posting for all allocations may bypass workflow controls and cause bottlenecks. Question 9. From a practical standpoint, what is the most efficient way to correct an unposted journal with a balancing error discovered during month-end review? A. Delete the journal and re-enter it from scratch. B. Use journal correction functionality to adjust only the erroneous lines. C. Create an offsetting journal in the next period. D. Modify the chart fields directly in the posted journal. Answer. Correct answer. B. Explanation. Journal correction tools allow targeted line adjustments before posting, saving time and preserving original entry context. Deleting and re-entering increases risk of transcription errors. Offsetting in the next period delays resolution and affects reporting accuracy. Modifying chart fields in a posted journal violates data integrity rules and is generally prohibited. Question 10. The fundamental question is how to ensure secure segregation of duties in PeopleSoft GL without overcomplicating role assignments. What is the optimal approach? A. Assign roles at user level with no overlapping permissions. B. Use permission lists with granular transaction security and assign to roles. C. Limit security setup to business unit access controls only. D. Rely solely on query security to restrict sensitive data. Answer. Correct answer. D. Explanation. Query security alone is insufficient for segregation of duties. It addresses data visibility, not transactional capability. The best practice is to build granular permission lists and assign them to roles, ensuring that no role contains conflicting rights. User-level assignments become unmanageable at scale. Business unit restrictions alone cannot prevent cross-functional access to sensitive functions. Question 11. Considering the evidence, Mr. Patel notices that intercompany journals between two business units post successfully in one ledger but fail in another. What is the most likely underlying cause? A. Intercompany balancing accounts not defined for the target ledger. B. Journal generator incorrectly set for source ledger only. C. Business units have different chart field structures preventing posting. D. Intercompany journals require manual approval for all ledgers. Answer. Correct answer. C. Explanation. Intercompany journal failures often result from mismatched chart field structures between business units, which prevent the system from correctly mapping and posting transactions. Missing balancing accounts would create errors during posting but not prevent entire ledger posting. Journal generator misconfiguration affects batch generation, not structural mapping. Mandatory approval is unrelated to posting failure when. Question 12. When faced with an unusually slow GL query for month-end balances, which optimization strategy is conceptually most effective? A. Adding more joins to retrieve related tables simultaneously. B. Running the query on a summary ledger table instead of detailed transactions. C. Increasing database memory without adjusting query logic. D. Using unfiltered queries to allow the system to manage indexing automatically. Answer. Correct answer. B. Explanation. Running queries on summary ledgers reduces the volume of rows processed, improving performance while retaining meaningful financial information. Adding joins increases query complexity and slows retrieval. Simply increasing memory does not address inefficient query logic. Unfiltered queries ignore best practices for selective retrieval and indexing, which degrades performance further. Question 13. To what extent does ISRIO's decision to allow multiple users to post journals simultaneously affect the integrity of intercompany balancing? A. It has no impact. Intercompany balancing is ledger independent. B. It risks temporary imbalances due to posting order conflicts. C. It improves reconciliation by allowing parallel processing. D. It requires changing currency conversion rules for accuracy. Answer. Correct answer. B. Explanation. Simultaneous journal posting can create temporary discrepancies in intercompany balances if the system processes the postings in different sequences, especially when journals affect the same balancing accounts. Ledger independence does not mitigate timing conflicts. Parallel processing does not inherently improve reconciliation. It increases coordination needs. Currency rules are unrelated to posting order timing. Question 14. Based on the information that ISTA needs to perform a mass journal reversal due to an error in allocation logic, what is the best practice to maintain order integrity? A. Delete the original journals entirely and re-enter corrected entries. B. Use the PeopleSoft mass reversal function to create reversing journals with reference to originals. C. Manually create offsetting journals in the next period. D. Modify the posted journal lines directly to correct amounts. Answer. Correct answer. B. Explanation. Mass reversal functionality preserves the audit trail by creating reversing entries linked to original journals, maintaining transparency and traceability. Deleting journals destroys history, violating audit best practices. Manual offsets increase error risk and may compromise reporting. Direct modification of posted lines is generally prohibited and undermines integrity. Question 15. In light of recent developments, Chen wants to validate the accuracy of her budgetary actual reports in GL. What PeopleSoft functionality best supports this? A. Using manual spreadsheets exported from GL for reconciliation. B. Leveraging ledger group budgeting and drill down capabilities for detailed analysis. C. Relying solely on summary ledger balances. D. Adjusting chart field definitions to match budget categories. Answer. Correct answer. C. Explanation. Using summary ledger balances allows high-level verification but does not provide line-level insight. The correct method for detailed budget validation combines ledger group budgeting with drill down to trace variances. Manual spreadsheets introduce risk of errors and reduce efficiency. Modifying chart field definitions does not inherently validate accuracy. It only aligns structures. Question 16. As demonstrated by Ista Lopez month-end close, an unusual number of journal posting errors are correlated to missing accounting templates. What conceptual oversight does this indicate? A. Users lack appropriate security roles to access templates. B. Accounting templates not associated with correct journal sources or categories. C. Journal entries posted before running the revaluation process. D. Fiscal calendars not properly mapped across business units. Answer. Correct answer. B. Explanation. Missing or misapplied accounting templates prevent correct GL account derivation during journal posting. Security role issues may prevent template selection entirely, but the scenario describes posting errors. Posting timing relative to revaluation affects balances, but not template selection. Fiscal calendar mismatches affect period alignment, not account mapping during journal creation. Question 17. Under the assumption that Is O'Connor wants to limit user access while enabling reporting, which configuration ensures data integrity and security in PeopleSoft GL? A. Assign users full access to all ledgers and rely on query security. B. Implement role-based security with permission lists defining allowable transactions and inquiries. C. Restrict access at the database level for sensitive tables. D. Allow users to post journals but prevent posting approval. Answer. Correct answer. D. Explanation. Limiting users to posting without approval prevents unauthorized financial impact while still enabling operational entry. Full access with query security does not prevent unauthorized postings. Role-based security with permission lists is ideal for segregation of duties, but the question emphasizes limiting impact. Database-level restrictions are technical and do not provide functional transactional control within. Question 18. Across different scenarios, Ista Thompson identifies that certain posted journals cannot be reversed. Conceptually, what is the likely system reason? A. Ledger period is closed and journal reversal is restricted. B. Journal lines contain invalid chart fields. C. Reversals require manual calculation outside PeopleSoft. D. Journal source was incorrectly defined as a non-reversible type. Answer. Correct answer. A. Explanation. When a ledger period is closed, PeopleSoft restricts journal reversals to maintain period integrity and reporting accuracy. Invalid chart fields prevent posting, not reversal. Reversals are supported within PeopleSoft, so manual calculation is unnecessary. Non-reversible journal types are uncommon. Most inability to reverse is period dependent. Question 19. Through the lens of system performance tuning, what is the best conceptual approach to improving batch journal posting efficiency in GL? A. Posting journals in smaller batches with optimized indexing. B. Combining multiple unrelated journal sources into a single batch. C. Disabling validation routines to reduce system load. D. Running batch processes outside of controlled fiscal periods. Answer. Correct answer. C. Explanation. Optimizing indexing and batching can improve performance without compromising integrity. Disabling validation routines reduces system checks and may improve speed but introduces risk of errors, making this less ideal. Combining unrelated sources creates processing complexity, and running batches outside control periods risks misalignment with reporting and audit requirements. Question 20. From multiple perspectives, Ista Silva wants to ensure that security auditing captures all unusual journal activity. What approach best supports comprehensive monitoring? A. Periodically reviewing manual journals only. B. Using automated exception reports and audit trails in GL. C. Delegating journal review to operational managers. D. Limiting security setup to use role definitions. Answer. Correct answer. B. Explanation. Automated exception reports combined with audit trails allow continuous monitoring of unusual activity, ensuring timely detection and investigation. Reviewing manual journals alone is insufficient in volume and frequency. Delegating reviews does not guarantee consistency or capture unusual patterns. Limiting setup to role definitions only establishes permissions but does not provide active auditing. Question 21. In the context of month-end allocations, Is Gomez notices that certain automated journals post to incorrect cost centers. What is the most likely underlying cause? A. Allocation templates are not correctly linked to target chart fields. B. Ledger groups are improperly configured for multi-currency transactions. C. Users manually overrode the system-recommended posting accounts. D. Journal generator batches are executed outside period-end processing. Answer. Correct answer. A. Explanation. Incorrect or incomplete linking of allocation templates to target chart fields causes automated journals to post to unintended cost centers. Ledger group configuration affects currency handling, not cost center assignment. Manual overrides would require user action, not a systemic error. Executing journal generator batches outside period end may affect timing, but not chart field assignment. Question 22. From a practical standpoint, Mr. Foster wants to reconcile subsidiary ledgers to the general ledger. Which approach conceptually ensures completeness and accuracy? A. Using trial balances from subledgers and matching them with GL balances. B. Reviewing only high-value transactions in subledgers. C. Reconciling after period closure to avoid repeated adjustments. D. Manually tracing every transaction from source systems. Answer. Correct answer. D. Explanation. Manually tracing transactions ensures each subledger entry is accounted for in GL, maintaining completeness and auditability. Trial balance matching identifies discrepancies but may miss unposted or misposted entries. Reviewing only high-value transactions risks undetected errors. Reconciling only post-closure delays detection and correction, increasing risk. Question 23. Taking into account PeopleSoft security setup, Mr. Ramirez observes, a user can approve their own journal entries. What is the best conceptual solution to prevent this? A. Assign approval roles and permission lists to separate user groups. B. Disable workflow approval entirely. C. Require users to post all journals manually. D. Limit access to ledger inquiry only. Answer. Correct answer. A. Explanation. Segregation of duties requires distinct roles for journal entry and approval. Assigning approval roles to separate groups ensures no one can approve their own work. Disabling workflow removes controls, creating risk. Manual posting doesn't prevent self-approval, and limiting inquiry access does not affect transactional approval. Question 24. Under the assumption that Is Davis needs to prepare financial reports for a multi-ledger environment, which method ensures data consistency across ledgers? A. Posting all journals directly to individual ledgers without consolidation. B. Using ledger sets with proper mapping of accounts and calendar periods. C. Extracting reports from each ledger independently and reconciling manually. D. Relying on summary balances from only the primary ledger. Answer. Correct answer. B. Explanation. Ledger sets consolidate multiple ledgers using defined account and period mapping, ensuring consistent reporting across business units. Posting directly without consolidation risks inconsistent balances. Manual reconciliation increases error potential. Using only the primary ledger ignores secondary ledgers and undermines reporting completeness. Question 25. Considering the evidence, Mr. White observes that certain journals fail posting due to invalid currency codes. What is the root conceptual cause? A. Missing or misconfigured currency code set up in the chart fields. B. Journal generator incorrectly batching transactions. C. Period end close process not completed. D. User permissions preventing currency selection. Answer. Correct answer. A. Explanation. Invalid currency codes typically result from missing or incorrect setup in chart fields, preventing system validation during posting. Journal batching does not create invalid codes. Period end closure affects posting timing but not currency validation. Permissions may block entry, but errors arise during validation, not selection restriction. Question 26. In what ways can ISLIN ensure accurate drill-down reporting from summary accounts to transaction details in PeopleSoft GL? A. Enabling transaction detail tables and maintaining links to summary balances. B. Restricting users to summary ledger inquiries only. C. Using manual spreadsheets to match transactions. D. Posting journals directly to summary ledgers without detail. Answer. Correct answer. A. Explanation. Drill down functionality depends on underlying transaction detail tables being active and properly linked to summary balances. Restricting summary access limits visibility. Manual spreadsheets are error-prone. Posting only to summary ledgers prevents drill down entirely, removing detailed traceability. Question 27. While examining month-end journal processing, Ista Silva identifies repeated errors due to missing balancing entries. What is the conceptual solution? A. Configure automatic balancing accounts for each ledger and journal source. B. Manually add offsetting entries after posting. C. Disable validation rules to allow posting without balances. D. Ignore errors if totals match at period end. Answer. Correct answer, B. Explanation. While automatic balancing accounts are ideal in scenarios where journals already post with missing offsets, manually adding correcting entries preserves financial integrity. Disabling validation undermines accuracy. Ignoring errors violates accounting principles. Proper configuration ensures prevention, but correction requires intervention. Question 20. Based on the information that Ista Thompson's users frequently exceed workflow approval limits, what is the conceptual remedy? A. Adjust approval thresholds and assign additional approvers within the framework. B. Remove workflow limits to allow unrestricted approvals. C. Require users to submit journals outside peak periods. D. Limit journal entry amounts to avoid exceeding thresholds. Answer. Correct answer, D. Explanation. Limiting journal amounts ensures transactions stay within existing workflow approval limits, maintaining segregation of duties and compliance. Adjusting thresholds may help but could compromise internal controls. Removing workflow limits eliminates checks. Submitting journals outside peak periods does not address approval limit violations. Question 29. As illustrated by Is Kim's experience with GL reporting, she notices slow performance when running custom reports with complex joins. What conceptually is the most effective solution? A. Optimize queries using selective criteria and indexed fields. B. Combine all joins into one massive query to reduce steps. C. Disable all validation during report generation. D. Export data to external tools for reporting. Answer. Correct answer, C. Explanation. Optimizing queries using selective criteria and indexed fields improves performance without compromising data integrity. Combining many joins increases complexity, slowing performance. Disabling validation may speed processing but risks inaccurate results. Exporting externally helps performance but does not resolve internal system inefficiencies. Question 30. Through careful analysis of intercompany processing, Ista Johnson notices discrepancies in transaction eliminations for consolidated reporting. What is the conceptual root cause? A. Missing intercompany elimination rules for the ledger group. B. Users posting journals to incorrect source types. C. Currency rates applied incorrectly at journal entry. D. Drill down functionality not enabled. Answer. Correct answer, A. Explanation. Intercompany elimination discrepancies are usually caused by missing or incomplete elimination rules in the ledger group setup, which prevents correct consolidation adjustments. Posting to wrong sources affects detail, but not elimination logic if rules exist. Currency rates and drill down affect valuation and detail visibility, not elimination processing.